Hello and welcome to Compass Global Markets weekly update. I'm Tony Boyajian. We'll start off with some US data that was released on Friday night. We saw the non-farm payrolls, the jobs numbers come out. They're a little bit better than expected. February employment rose by 313,000 against a forecast of 192,000. Now the unemployment rate was unchanged at 4.1%, but the all-important average earnings figures showed a slightly worse outcome than expected. The annualised earnings actually fell from 2.8% to 2.6%. The market, however, still interprets the result as meaning we will see 3 US rate hikes this year. Now, investors continue to buy growth assets like commodities and shares as the weaker US dollar raises the purchasing power of commodities. Now, overnight, we saw the US federal budget numbers come out for the month of February. It showed a deficit of $215 billion. Now, the previous month in January, it was a surplus of $49 billion. We've seen the US dollar remain heavy as trade uncertainty prevails. Now, the big market news last week was the imposition of tariffs from US President Donald Trump on imported steel and aluminium, or aluminum as they call it. Now, this is very likely to make the price of steel and aluminium more expensive for US importers. This policy in the end may do more harm for the US economy, given the trade sanctions could unsettle the expected benefits of the tax reform. It seems this protectionist policy is aimed at China. Why? Well, there's two big reasons. The US or any other country, for example, can't build any factories in China unless they're joint ventures, and even then they can only own 50% of it maximum. Secondly, they cannot get government approval, they need to get government approval to get their money out of China. At the moment they're limited to only $50,000 US per annum. Moving to local events, last week we saw Australia's fourth quarter GDP number disappoint. Annualised, it came in at 2.4%. The third quarter result had an annualised figure around 2.9%. And with population growth around 1.6% per annum, what this means is economic growth in Australia remains weaker than expected. Nevertheless, Australia's unemployment for the month of February fell from 5.5% to 5.4%. However, the issue isn't the jobs growth, it's the issue of underemployment. That is, those with a job but seeking more hours of work, and that number is ballooned to the tune of 70% over the past decade, and that number does not get captured in the jobs outlook. So that's an important development in the local labour force activity. So given Australia's benign inflation outlook, the weak consumer spending, the low wages growth environment that we've been talking about, and the softening housing data, it looks like the market is not anticipating an RBA rate hike in Australia until May 2019. Look elsewhere, we're seeing some developments, or lack of developments if you like, in Europe and also in Japan. Both central banks, the ECB and the BOJ, have kept interest rates unchanged as expected because their inflation targets and inflation rates remain well below the target rate of 2%. The Italian election outcome will take a couple of weeks before they can determine a centre-right coalition government. That's the target. Italians remain frustrated with the lack of economic recovery. The unemployment rate in Italy is above 11%. This week's main economic data focus will be on US CPI data tonight for the month of February. The forecast is for a core CPI rise of 0.2% or 1.8% per annum. Once again, it shows the sluggish inflation rates. And tomorrow, on Wednesday, China's regular monthly economic dump will be released in terms of retail sales, investment and production data. For further information and further news on these upcoming data, please watch Sky News Business every Thursday lunchtime around 12:30 p.m. for our latest markets wrap. Have a great week. I'm Tony Boyajian, Compass Global Markets.